Good day, fellow investors. We can talk about crashes as much as we want. We'll see what the future brings, but I think the biggest value that I can give you is by simply discussing what I have done in the last crash and what I will do in the next crash that will inevitably come sooner or later. If you get value from this, click that like button. So let's start with what I did in the last crash. I don't think I have to remind you, but the last crash was a little bit more than a year ago, the COVID crash, when the S&P 500 crashed 31%. And let's see what I did. And I'll bring you to my research platform. Here you have everything that I have done over the last 3 years, my sector analysis, stocks that I covered, traded in the US, traded in Europe, traded in Asia, all my portfolios and all my historical transactions. This is the monthly edition portfolio. Each month I add something and I buy something. I have to do that for next week. Lump sum core portfolio, so once invested and that's it. Just managing the positions, and just look at what I did in 2020. Portfolio purchase March 2020, portfolio purchase 20 March 2020, 6 April, so a lot of portfolio purchases because things were cheap. So if a crash comes, I will do that again. So just buy as much as I can. And you can see here deploying some personal liquidity in this crisis. 16 March 2020, what did I do? I have put 20,000 euros of my liquidity and purchased 6,374 stocks of London mining at 33 Swedish crowns. So that did well. Since then I had to sell much earlier because we bought a house for living, and then I sold also earlier on my other portfolios, but okay, we did good. We did good because we bought in a crisis. So message number one, very easy. Sven would buy more if we have a crash. And now starts all the comments. Yes, but what if you don't have money? Should I sell my stocks now? That is now the second part of the strategy. Let's dig into that. And starting with strategy, lower prices are better for all of us. So as Buffett says, everybody is happy when something is on sale. If the car you wanted is on sale, if the shirt you wanted is on sale, you're happy. If the stock you own is on sale, 50% down, we are unhappy. That's again human irrationality. Because if stocks are lower, the yields are higher, your long-term wealth is higher. That's the key investment principle to understand. Then if a crash comes, we are happy while everybody else is crying, selling in panic, and giving us great investment opportunities. The key component of thinking that lower prices are better is that you don't think as the stock market value, as the value of your portfolio giving you safety. No. What gives you safety is the cash flow from your portfolio. The cash flows, the strength of those cash flows, the growth of those cash flows. And only then you can consider yourself an investor. Warren Buffett doesn't care about stock prices. He cares that in 2019 he got 32 billion from his businesses in cash. 2020 crisis, he got 25 billion. Well, he will redeploy that, buy other stocks, as we have seen in the Verizon and Pharma video, or redeploying, managing his positions, just investing over the long term and accumulating wealth. The lower the prices are, the more wealth you accumulate, the richer you are in the long term. That's the first concept to understand. Then next, it's very important to see what kind of crash we will have and be prepared for that. If we have an inflationary crash, I am long commodities in my portfolio, so those should do good. Fertilizers, natural gas, etc. Those should do good in an inflationary crash, which can happen, might happen given all the money printing, but more about that on Saturday with Ray Dalio's last letter that will dissect and explain. We can have volatility crash, so just quick panics like we had, and I have a position, large position in my portfolio that should benefit from that. Next potential crash is a liquidity crash, and this is something very peculiar. I'm fully invested, I don't have any extra money, but I would still be happy if there is a liquidity crash, because hopefully in that period I would get just some dividends, let's say 2-3% of my portfolio, reinvest that, and my long-term returns should be higher just from the reinvested dividends. And you can call me crazy, but look at this. In the worst depression, 1930s, the S&P 500, when it crashed 86% in the 1930s, early 1930s, the dividend yield went up to 15%. Those that just reinvested the dividend or part of the dividend made 10 times their money over the next 10 years just on the dividend. So no matter what happens to stock prices, businesses will still do businesses. At least some of them, something you will get that will allow you to accumulate wealth over the long term. Also 1980s, 6-7% dividend yields. Those that invested those high dividend yields over the 70s, 80s did really well and are now enjoying dividend yields of 100% on cost. So they don't really care about the ups and downs of the market. Another very interesting crash that can happen is a geopolitical crash. Also something that Ray Dalio is warning us, and that's something that I still haven't figured it out. I'm working on that. That will be something I'll have to update in the future. So really we can have capital constrictions, controls, bond yields restrictions. A lot of things can happen in the long term, but that's something that we will see and look as those develop. Hopefully we can move earlier than the risks really materialize. Panic crash, simply if my volatility play goes up, I can rebalance and reinvest the dividends. So that's what I do. If we have an interest rate crash with higher long-term yields, even better, which means that the current positions, let's say my portfolio crashes 50% over the next 12 months, but the businesses remain doing business, remain paying dividends, then I can simply reinvest at a higher yield and I'll be richer over the long term. Of course, I'll always balance between the positions to try to get some extra returns, but that depends on the situation in the market. And now this all sounds wonderful, yes, but it's not that easy. Yes, it is easy if you have the right fundamentals. In the 2020 conference, Buffett said perhaps the most important thing that he ever said about investing, but nobody caught that. He said that he hasn't had any financial concerns for the last 70 years, which means he's now 90 since he was 20. No financial concerns. Can you imagine that? So whatever happens, you are good from your life perspective. Only this allows you to have a cool mind, a rational mind, to make purchases when everybody else is not doing that, when everybody is panically selling. You need to have the fundamentals of financial life sorted out, then everything is easy. I see too many of you, depending on the stock market staying higher, on bond market staying higher, sitting on so much risk because you hope that it will last forever. For me, that is risk. And if we have a different scenario than the 40-year bull market we have been enjoying, then it might get very ugly for many. Fundamentals first. My family, we need $2,000 per month to have a good life. If we really need it, we can lower it to $1,000 and we still have a good life, including all the payments, all the food, everything, maybe less traveling. But that's, let's say, the minimum. That's the flexibility we can sustain easily. We love nature, we love walking around, so that's also fun, and it keeps the family together. So that's one thing. No crazy mortgage, no I need to get that bonus at the end of the year to pay for this, for that, for that. Just plain living, okay, and everything else is a bonus. And that's something you have to set up for your life, and then everything becomes that easy. Of course, you have to also think about income. Do I have the income or the safety to survive for 1, 2, 3, 4, 5 years? Worst case scenario. And then we can talk about investments, because then we can really rationally talk about investments and do the right thing at the right moment in time. I know I sound like an alien now because everybody is betting, oh, I need to double my money, I need to do this, this, this. But that's not what the point is of investing, which is long-term wealth accumulation. And my strategy is pretty simple. If things crash, I will have higher yields, I'll accumulate more wealth because my investments are separated from my personal needs. And yes, when things do well, like I sold London to pay for the house, then I take out for, let's say, the extras in life. But my life, my core life, doesn't depend on the investments, which allows me to do rational investment decisions and to take advantage of the 15–20% dividend yields that here and there do arrive. Further, something interesting, as I'm building, let's say, my safety and portfolio and accumulating wealth over time, I'll likely also invest in the coming years. I'm focused on income now. In the coming years, I'm focused on managing my portfolio and on building my business now. But in the coming years, I'll likely invest in some good property that will deliver dividends, yields, no matter what, for even more increasing the safety net to really be even freer of making investment decisions. And in the worst case scenario, I'm extremely happy just keeping reinvesting the dividends, accumulating, owning more of the businesses I own. That's the main strategy I can share with you. And now, don't panic. If you are not there, please don't panic. You create such a fundamental environment over a decade. If you are not there now, subscribe to this channel and let's build this fundamental over the next 10 years. You don't do it in a day, you build it over a decade. I need to increase my income. Okay, can I do this? Start thinking in those ways, and that's how it's done. Okay, this stock is cheap. Does it improve my wealth over the long term? Okay, yes, this is better than this is better than this. And then you think, okay, in the next 10 years, I want to be there. And people usually overestimate what can they do in a day or a month, but underestimate what they can do in a year or a decade. If you want to build a great portfolio, give yourself 10 years, and then it's easy. So if you like this investment mindset and strategy, please subscribe. I'll see you in the next video.